Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of business filings, and let me tell you, this one is a bit of a head scratcher, or maybe it's just a very simple update on a previous deal. Let's see. So we're looking at a Form 8K filing from SHF Holdings Inc. Now, an 8K is basically a report a company files when something significant happens, something that shareholders really need to know about right away, not like waiting for the next quarterly report. Think of it as breaking news for investors. Right now, SHF Holdings Inc. is telling us about something they did back on September 9th, 2025. It's about a financial agreement, specifically a note. Back in August, they had already sold some of these notes called Convertible promissory notes. These are like loans, but they can be turned into stock later on. They had a total value of $562,500. Then on September 9th, they sold another one of these notes, this time for $104 notice to a single investor. This new note is exactly the same as the ones they sold earlier. Now, a little bit of context about the company itself. SHF Holdings has its common stock trading on the Nasdaq under the symbol SFS. They also have warrants, which are like options to buy stock at a certain price, also trading on the Nasdaq under SHFSW. These warrants allow you to buy shares at $11.50 each. The company is checking a box here that says they are an emerging growth company. This basically means they are a newer company and get to follow slightly different, often less strict rules for financial reporting. They've also decided not to wait around to adopt new accounting standards, which is usually a sign they're trying to get their ducks in a row early. Let's talk about the actual equity they have. They have Class A common stock, and the par value, which is a very small legal amount, is $0.000001 per share. Then we have those redeemable warrants we mentioned earlier. Each one lets you buy one share of their Class A common stock. The price you'd pay to buy that share using the warrant is 11.50 cents. This part here just tells us that the currency they're dealing with is US dollars and the unit is shares. Standard stuff for a US company. So what does this filing really say? It's mainly about this note agreement. It's not a massive financial disclosure with revenue numbers or profit and loss statements, but it's about the company taking on more debt, or rather issuing a convertible promissory note. They're also clarifying that this specific note, like the others, was sold without a full public registration. This is allowed under certain exemptions in securities law, usually when selling to a select group of sophisticated investors like this accredited investor they mention. It means they didn't have to go through the whole public offering process for this particular deal. And it's signed off by the CEO, Terence E. Mendez-Oxay. Now let's put on our financial detective hats. What this filing doesn't give us are detailed financial figures like revenue or expenses. It's purely a notification of a specific transaction, the issuance of a convertible promissory note. These notes are essentially short-term loans that can be converted into stock later. The key for investors here is to understand the terms of these notes, especially the interest rate, if any, not specified here, the discount and the conversion price, has any short-term loans that can be converted into stock later. The key for investors here is to understand the terms of these notes, especially the interest rate, if any, not specified here, the discount and the conversion price. The fact that they are issuing these notes suggests they might need capital for operations or growth, and they are using private placements, often with accredited investors, to get that funding. This is common for companies, especially in their earlier stages or when they want to raise funds quickly without the complexities of a public offering. The conversion feature means that if the company's stock price goes up significantly, these note holders will likely convert their notes into shares, potentially increasing the total number of shares outstanding, which can dilute the ownership percentage of existing shareholders. It's important to remember that this 8K is just a snapshot of one event. To get a fuller picture of SHF Holdings' financial health, you'd need to look at their more comprehensive filings like their quarterly 10Q or annual 10K reports, which would contain detailed financial statements. So to wrap up, SHF Holdings Inc. has issued another convertible promissory note. This signals they are actively managing their capital structure and likely raising funds from private investors. The important thing for current and potential investors is to understand how these notes might convert into stock and what impact that could have on the company's ownership structure down the line. The fact that they are an emerging growth company means they have some flexibility, but also raises questions about their long-term financial stability compared to more established companies. Without more financial data, an emerging growth company means they have some flexibility, but also raises questions about their long-term financial stability compared to more established companies. Without more financial data in this filing, it's hard to make a deep financial analysis, but it does show ongoing activity in their financing efforts. What's your take on these kinds of private funding deals? Let me know in the comments what you think about convertible notes. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more insights into the world of corporate finance. We also have a Discord community where we discuss these findings in more detail, so check out the link in the description below. Thanks for watching and I'll see you in the next video. We're going to be going through how to read an end of viewing.